Hey folks, Dan Frio here, the rate update. Today is December 10th, 2020. Man, we're like 2 weeks away from Christmas. Well, 2 weeks and 1 day. That's crazy. That being said, what happened to rates today? What happened to the stock market? Don't go away, we're going to go over that in a minute. Say the stock market's been pretty darn resilient lately. Just think of what we've gone through this year. We've gone through a pandemic. There's hundreds and hundreds of thousands of people out of work. There's no good news. Companies shut down. Manufacturing basically stopped. People are working out of their homes. Kids aren't going to school. If you threw that whole scenario at me and said the stock market would be hitting all-time highs, I'd be like, you're nuts. That being said, the good news is we hit historic lows 13 times this year. And we keep bouncing off that bottom. So that's what my whole goal is here for you guys, is to show you that I monitor this on a daily basis and then give you a little bit of background in saying, here's where rates are. Here's what I'll put it this way. Here's what they should be doing. But the tough thing is, in this market, it's very hard to tell what tomorrow's going to bring, because there's so much non-making sense in all of this that I sit at this computer all day, every day, and monitor rates to make sure our clients get the best rate. We lock them in the perfect timing. We get you in the right program, and so forth. So you came to the channel to figure out, what did rates do today? Well, let's talk about it. It all starts with this number right here, or these figures right here. What this is, it's the mortgage-backed securities market. This is the bond that trades, that most people don't have a clue what it even is or that it even exists. But me and all my followers, we know that this is the biggest piece of the puzzle on what determines mortgage rates. It's this, along with what we call loan level price adjustments. So we follow this on a daily basis. This is what's happened today to the price of mortgage-backed security bonds. This bond is loaded up with mortgages, sold on Wall Street as an investment, and the yield on this is one of the determinants of where mortgage rates are. Okay, so that's in its simplest form. So what we try here to do is monitor, predict, and figure out, what is a good time to lock in? Is this the best time to do this? Should you be refinancing? Should you wait? Should we lock? Should you do it now? And let's figure out if it's good for you or not. Okay, so that being said, this is what happened today. Okay, so what I always say to people is how you figure this out. And I'm going to make it as simple as I can. When the number's green and it goes up, that means the bond price went up. Okay, as prices go up, we all know there's an inverse relationship in regards to the price and the yield of the bond. Okay, so what I mean by that is, as the price goes up, if the number's green, price goes up, yields or interest rates come down. That's all you need to know. So if you watch my channel and you're like, okay, the number's green, the bigger the green number, the lower rates are coming. Okay, if the number is red, means prices are going down for the bond. That means that we're paying less for the bond. That means the rate of return, the interest rates are going up. I'm going to leave it at that. We don't need to dig in. If you want to find out more about the MBS market and so other things in detail, check down below, subscribe to my channel, check all my videos, and you're going to find about 100 of them that pertain to the mortgage-backed securities market. But right now, this is what we focus on. This, and there's a lot of other things that are in the background. So what I'm going to go over right now is this. This number is a bond. Okay, and the biggest determinants of what's happening with this bond on the backside is, how's the economy doing? What is employment doing or unemployment doing? What is the gross domestic product doing? What's inflation doing? What's payroll numbers doing? What's shipping numbers doing? All this stuff. I monitor that for you, and I come back and try to condense it at the end of each day to say, guys, here's what's going on. Here's what happened today. Here's what should be happening the next week, 2 weeks, month, year, and so forth. So let's get on to it. This number's up 8. Not a big change, but I'd rather have it go up than down. Wouldn't you rather have your stock price go up 10 cents than lose 10 cents? 10 cents is 10 cents. So if we chart this out over the last quarter, you've seen stability in the markets. So we're going to focus right in here, where we've been in the last couple of days and what I'm seeing out a week, 2 weeks, a month, maybe in the next quarter. Okay? So that being said, the Federal Reserve has stepped in and basically said, we're going to do everything we can to stabilize the markets. Look at this right here. If I put this line right here, this is where we should be trading, and go back to all my videos, and I always say, this is basically where we should be trading. Okay, so if you're watching a stock as it's going up and down and up and down, you would hate this as a stock because it really hasn't done anything in the last quarter. So you're like, I'd invest in something else. I would have made some money. Well, the nice thing about this is stability is good. Okay, stability is real good. The Federal Reserve is doing a fantastic job. So mortgage-backed security prices haven't really varied much at all. Let me go back to, let's say the right when this pandemic hit. Look at this. And again, remember, guys, what I say: if this number goes down, what happens to rates? Prices down, rates up. This is a huge change in the market. Look at the disparity from here to here. And that basically happened in a couple weeks span. And then you look at the rest of the year. We're basically at our best points kind of ever to a point. And you can see many times here we're hitting record lows, record lows, record lows, record lows, and so forth. We're right into here. So let's condense into this area here. All right, so that's that. So this is where we're trading right now. Love it because I like the stability, okay? So again, what I try to tell everybody too, just because this says, oh man, did we just drop 5? Is that live? Hold on, let me make sure we're live. You saw it, we went from +8. Yeah, we went from +8 to -5. That's a pretty big move. I don't know what's going on because we're basically after hours. Must have just balanced at the end of the day maybe. Okay, so that being said, we ended up 5. Well, it's good that you saw that. We went from 8 to 5. What did happen throughout the day? Okay, and I went over this yesterday to kind of explain to everybody. Your stock might have opened up at $100 a share and ended up at $100 a share. What did it do during the day? You have a lot of day traders, options traders that follow tick by tick by tick. Well, that's what this does. That's what I do. Okay, so I monitor this. The market opened up. Let's say it opened up here. We were 103.56. You can see the little black box next to my arrow. Okay, it went down. So 103.56. It went to 103.5. So we lost 6 ticks there, but then we went up all the way up to here, 103.67. All right, so we were up 11 ticks. What does that mean? Again, up means rates are coming down. That we might have been able to catch during the day, maybe like a 0.1 reduction in your rate. This is what I follow, okay? It's hard to grab that piece, but I follow the daily charts, the quarterly charts, the intraday charts, and everything, so you don't have to. Rely on us and my team to do this for you. Okay, the news in the background is the stock market was down 70 points today. There was a bond auction. You don't care about the bond auction. I'm not going to go over the bond auction with you. Some of the numbers, like I said at the beginning of the show, was what factors into this stuff. Okay? Employment. Well, the employment numbers came out and initial jobless claims were up 137,000. Not good. Continued jobless claims were up 230,000. Not good. They call it the Pandemic Unemployment Assistance Program. It dipped 313,000. Well, the reason why it dipped 313,000, that's not good news, is the program expired. So people are gradually moving out of that program. Okay. So basically, employment bad. Some good notes is, and I also said what inflation is doing. Well, inflation was up 0.2% in the month of November. Year over year, it was up 1.2. The Federal Reserve, their target figure is 2%. Not even close. So we're not even concerned about inflation at all. So let's go over what happened today. The ECB, that's the European Central Banks, they didn't do anything with their mortgage rates. That's like the Federal Reserve. Consumer Price Index, you can see, the consensus was we were going to be at 0.2. We were at 0.2, so no shock there. Initial jobless claims, I don't know if this was predicted, but the stock market was down 60, no big deal, and the bond market didn't really do anything. So this had no impact on anything. Continued jobless claims. We went over this just a second ago. They're bad. The consumer price index, the CPI excluding food and energy, this is basically an inflationary measure. The consensus was 0.1, it was 0.2. I mean, you're 1/10 off of whatever. Not going to change anything. Consumer price index, including food and energy, was at 1.1. Consensus, we came in at 1.2. Again, 1/10 off, no big deal, and so forth. The only other figures coming out tomorrow are other inflationary numbers, not really going to do anything. So the whole economy is basically dependent right now on what the Fed is doing in regards to rates and stimulus package, not stimulus package, that's the federal government. What the Fed is doing, how they're going to control monetary policy, meaning keep rates low, they're going to keep rates low. And the Fed, what kind of ticked me off was a comment that Ms. Pelosi came out with yesterday and said, you know what, we're going to go ahead and accept the stimulus package that her and Mnuchin put together that they've been screwing around with for the last 3 or 4 months, and they haven't passed. And each person's battling back and forth and back and forth. But now, yesterday, they compromise. So it was like, what was the compromise? And guys, I don't want to get into politics stuff, but what kind of pisses me off is when you get to this and they play this, this role, and then I shouldn't even go, over this on this channel because, again, I don't want to get political. I'm in this for the good of all of us. That's why I do the channel. I want the best for you guys. I want the best for your family, your kids, your this. I don't care what political aisle you're on, but what unnerves me is when they have the gall to sit there and look at you in the cameras and lie to you. And now all of a sudden, they wouldn't accept a $1.8 billion stimulus package, but now they're going to accept a $0.8 billion package. You're accepting half of the packaged agreement that you were agreeing to or should have agreed to a month ago to help everybody out, especially during Christmas time and the holidays. But now you get and you didn't want a victory for, that political side, but now the election's mostly over, and now you agree to half the stimulus, and the reason being was, because we got a new president. That's wrong. And I don't care what political side you're on, Republican, Democrat, whatever. If it was a Democrat, which it was, I would 100% oppose. And if it was a Republican doing the same thing, I'm 100% opposing it. So please don't comment down below. I don't want this to go into political issues. But, that stimulus package, as well as what the Federal Reserve is doing, that's basically what's keeping the whole economy afloat. Don't play with my lives. Don't play with our lives, government. Let us, manage a lot of this stuff. So I apologize about the rant, but please, I don't want political issues on here because that can divert from what the main topic should be. And it's us educating each other, working together to help the common cause. All right, so now on to, after my rant, let's get on to a publication I post every day. And this should be out here periodically because I just got it. Basically saying bonds are getting ready to move, probably. I'm saying no. There's really nothing in the cards that should make anything change. So, if there was, I would tell you there's no economic news coming out. There's no really political stuff coming out. The Federal Reserve isn't going to do anything to change anything. Hopefully the government does assign the stimulus package, at least something to help people, especially during the holiday season. So that's that. So let's get on to where are my rates today. No change from yesterday, but again, you gotta love the stability. I'd rather have this going on than, guys, rates went up 1 full % today. That's hard to manage. Okay, so I just want to go through this with you real quick so you can get an idea kind of where benchmark rates are. When you're breaking down a rate sheet, there could be basically 100 different factors involved that could modify or adjust your rate. Okay, and those things are what we call loan level price adjustments. And you're going to see that in this demonstration real quick. So these numbers are based on a $250,000 loan. on a single family property that's your primary residency, meaning the person lives there as their primary residency. This is a conventional loan, which is just a standard loan. The top portion is if you're looking to purchase or do what's called a rate and term, okay? And it's a 30-year fixed. Down here is what we call a cash out. So rate and term means basically we're just taking your current balance and we're refinancing that, in this case, to a 30-year term. Down here means you're cashing out, meaning you're taking in excess of $2,000 more than your current balance. So you can see there's a disparity here in the rate. Well, Dan, why is this rate a little bit lower than this? Well, let's figure that out. The benchmarks here that we're using is a 740 credit score at 80% loan to value. 80% loan to value means the loan to value, loan divided by value. $100,000 loan, $200,000 value. What would that be? 100 divided by 200 would be a 50% loan to value. So that gives you an equation on how to create or how to figure out the loan to value. So this one, it's a 740 credit score at 80% loan to value. The rate is 2.75. This is cashing out, but look at the variance there. We're only going to 75% loan to value. The rate is 2.625. So this just shows you there's variations on how the rates get adjusted. Now, the lower your credit score, the higher the rate. The lower the loan to value, the lower the rate. So look at it this way. If you were going to lend somebody money, if you had a deadbeat cousin who wanted money from you, you probably wouldn't lend it to him. Well, in our case, as a bank, we lend it to him, and the biggest factors are, let's just go through this, for example. 740 credit score is a great credit score. They probably have never missed a payment in their life. So in that case, you're like, I'd lend it to them. All right? Let's say they are a deadbeat. That's probably a bad word to say, but let's say they have a credit score and they miss a lot of payments a lot of times. Well, it's riskier for us, as well as you're like, what's the likelihood of me getting paid back? So how we manage that risk is we increase the rate, okay? So you got to just think of it. The riskier the client or the riskier added layers of risk here would increase the rate. So meaning if you have a lower credit score, the rate would go up. If I'm giving you a higher loan to value, that means I'm giving you more money based on the value of your house. There's less equity in that house in the event of a default. Let's say you defaulted on a loan and I was at 100% loan to value. I go to sell that house. I'm going to pay commissions. I'm going to pay a whole bunch of other costs. I'm going to lose money because if you owe me $100,000, the house is worth $100,000. I got to evict you, fix the house a little bit, sell it, pay commissions, pay taxes, pay everything else. I might be left with $80,000. I just lost $20,000. So that's basically how the rates work. The riskier the loan, based on several different variations, the higher the rate. So I won't dwell on that, but that's where these rates are. Now, term also factors into this. So this is 30-year. So the 30-year rate up in this section, and I'm going to have the same criteria below, but right here on a 30-year, we're at 2.75. On a 15-year, where are we at? 2.37. So you can see just because of the term is shortened, that's less risk for us because we get paid back quicker. You get a lower rate. Okay, so that's just to basically show you that there are variances in rates. There's huge variances in costs. And that's why I always say, and I'm going to say that here at the end, how we can help you compare costs versus different mortgage options. Now we get into our government programs. It's FHA, VA, and USDA. I'm going to start at the bottom. USDA means it's a rural property. The house has to meet certain criteria, as well as your income and credit has to meet other specific criteria. If you're in these areas, and these areas are, I'll say, kind of deceiving because there's big parts of every state that you wouldn't think are USDA eligible that are. Okay, now if you're downtown LA, it's not going to work. You're downtown Chicago, it ain't going to work. But if you're way out in the suburbs, it might work. So if you want to check in on this, just give us your address and a little bit more details, and we'd be more than happy to pull up to see if you're eligible for the USDA program. On that, you can go 100% financing. So the 740 credit score, if you're looking to buy or refinance a home, the rate's 2.375 on a 30-year fixed. Look at that. It's in the low twos on a 30-year fixed. VA, if you're a veteran, God bless you, thank you. You can purchase or refinance a house up to 100% loan to value. 740 credit score, that rate is also 2.375. So if you're a veteran, you can buy a house at no money down. Same thing here. Now, if you have minimum down payment, you can go with an FHA loan. It only requires 3.5% down, so meaning we're going to finance 96.5%. If you have a 740 credit score, we can get to 2.375. Now, the benchmark isn't 740 on these programs. The benchmark on all these programs is 600. So as long as you have a 600 credit score or higher, you can possibly qualify for these programs. But again, like I said before, the rate's going to be a little bit higher if your credit scores are lower. Okay, I'm just giving you a snapshot of kind of generically where rates are. Programs that we're known for, jumbos, and we can do up to $5 million. We can do higher than that on an exception basis. But just to break this down, you can purchase, do a rate and term, 60% loan to value. We can actually go to 80, but a lot of the ones we work are about 60, 65% loan to value. That rate on a 30-year fixed, 2.875 with no points. Under 3% on, look at this, up to $5 million, 2.875. That's nuts. Now, here's a program that we're one of only a handful of companies in the country that can handle. If you're in any of these counties right here, you might want to freeze the screen here. You can finance up to $1 million at 95% loan to value, meaning if you're buying a house, you only need 5% down. The normal jumbo program is going to require 20% down. So on $1 million home, 20% down is $200,000. Okay, $200,000 normally. You only need 5% down. Okay, $50,000. So you just there's a difference of $150,000. And my rate right now is 3.5%, 30-year fixed. That's where my rates are today. Okay, so you're like, Dan, cool. Now what? How do we do this? I need to talk to you. I need to get this ball rolling because I want to save money, especially during the holidays. Come January, can I possibly skip a mortgage payment? Maybe 2 mortgage payments, maybe pay off my credit cards. Maybe I just I was furloughed, now I'm back to work. I can consolidate some bills, just get my head out of the sand. Well, best way to do that is I'm going to show you several things, but here's what I ask people every day. And hopefully it doesn't get on your nerves, but it doesn't seem to be because I got a lot of people sending me data. Is if you're in the process of building a house, buying a house, refinancing, if you're in the mortgage process, you applied with somebody, they have to give you or issue you a loan estimate or a fee worksheet. Okay, one of the two things. Usually you get a loan estimate. Get a second opinion. Let me be that second opinion because we have some of the best rates in the whole country, and I can compare it and say, okay, here's what I can get you, here's what they're getting you. Many times I'm like, God bless you, you did a fantastic job, good for you, you're getting something I can't beat. Most often, and I'll say it's 90% plus, is I'm winning on the rate, the fees, or even both, okay? All I ask you to do is just waste 5 minutes of your time, send me an email, drag and drop your loan estimate, your fee sheet into that email and just say, Dan, what can you do? And within, if it's during office hours, probably within a half hour, I'll get back with you and say, okay, here's what I can do. Hopefully it's a number you like. Then you can say, okay, let's get the ball rolling. What do we do? And I'll send you off to the next thing. If you're not in the mortgage process yet and you're like, Dan, my rate's 4, does this make any sense to refinance? How much is it going to cost me? What's this? Shoot me an email. Shoot me a copy of your mortgage statement. With that data, I can probably put together, I can put together some numbers for you and say, okay, here's what it looks like. And I just got a brand new software that actually walks you through it, and we can both be on the system at the same time. But what I'll do is I don't like high pressure. I don't want to make you seem like you're on the spot. So I'll send that data to you, you review it, and then you come back to me and say, Dan, yeah, let's do this. Or ask more questions. I love questions because what I don't want you to do is get into something and then find out 2, 3, 4 weeks later, it's like, I never knew that. I don't like that at all, and I'm not trying to do that to you. So here's the best way to do all this. If you want to get in touch with me or my team or put an application in or anything, go to therateupdate.com. Scroll down to the bottom. This is our number, 844-775-LOAN. follow us on any social media. I'd love to hear from you. I'd love for you to follow us and kind of go from there. Here's me. There's a team meeting going on. I walk you through the building, just in a little intro to say, here's who we are. Right through here, this is how you can reach me. My name is Dan Frio. My email address is D for Dan Frio at preferredrate.com. So send me your loan estimate, your fee sheet, your mortgage statement, whatever you have to this. However, if you're like, I just want to get this ball rolling. I like what you got. I like what you're saying. I like everything about this stuff. What can I do? You can hit here. You can hit here. You can hit here. You can hit here. All these will route you to an application process, 100% secure. Based on the questions that you answer, it's going to ask you at the end saying, here's a few items we need from you. This will expedite the system. It'll say, drag. If it's a refinance, it will say, can we have a copy of your mortgage statement? You can drag and drop it right in there. How much is your income? Can we get a copy of your W-2? You drag and drop it in there. So now I know your income. Now I got your mortgage statement. I know how much you owe. I got your address. I can pull up a website to figure out how much the value of the property is. All those things give me more pieces of the puzzle to get back to you with a more solid quote or plan is the best way I can say that. So that's it for today. So all I ask you to do is, if you would, please give me a thumbs up. Subscribe down below. The more subscribers we get, it makes me feel warm and cuddly, but the YouTube algorithms helps us get up in the ratings and have more and more people be able to find us. So that's what I would really, truly appreciate that you do. Smack the bell, so every time I do post a video, I try to label them if I have anything out of the ordinary, like, hey, what's this or what's that? And it might be something that might interest you. Watch it. Might be something are not interested in. Don't watch it. That's all I ask. So that's it for today, guys. God bless. Take care. Be safe. Be happy. I'll see you tomorrow.